Hi, I'm Ed Sakota. In response to numerous requests over the years to reveal the inner workings of my trend trading system, I hereby take great pleasure in presenting its essential elements for your financial edification. Joining me today are several members from the Northern Nevada Bluegrass Association. We gather to play benefits for local area hospitals. If you are currently in a clinic as a recovering marketaholic, or even if you have a mild case of marketitis, this tune might put you on the road to recovery. In any event, pull up a chair, lean into your monitor, and lend us an ear. We hope that you enjoy the show. You get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. One good trend pays for 'em all, honey trader, baby mine. Now what do we do when we catch a trend, honey? What do we do when we catch a trend, baby? Well, what do we do when we catch a trend? We ride that trend right to the end, honey trader, baby mine. So you get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. One good trend pays for 'em all, honey trader, baby mine.
Well, what do we do when we show a loss, honey? What do we do when we show a loss, babe? What do we do when we show a loss? We give that daggone loss a toss, honey, baby mine.
Well, you get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. One good trend pays for 'em all, honey trader, baby mine.
We make a lot of money and we sleep at night, honey, baby mine. So
you get a whipping, I'll get a saw, honey. You get a whipping, I'll get a saw, baby. You get a whipping, I'll get a saw. One good trend pays for 'em all, honey trader, baby mine.
Well, what do we do when the price breaks through, honey? What do we do when the price breaks through, baby? What do we do when the price breaks through? Our sauce or Renzo's nothing to do, honey, baby mine.
So you get a whipping, I'll get a saw, honey. You get a whipping, I'll get a saw, baby. You get a whipping, I'll get a saw. One good trend pays for 'em all, honey trader, baby mine.
What do you do when the drawdown comes, honey? What do you do when it gets real big, babe? What do you do when it's even bigger? We stick to the plan and pull the trigger, honey trader, baby mine.
Well, you get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. One good trend pays for 'em all, honey trader, baby mine. What do we do with a hot news flash, honey? What do we do with a hot news flash, babe? What do we do with a hot news flash? We stash that flash right in the trash, honey trader, baby mine. So you get a whip and I'll get a saw, honey. You get a whip and I'll get a saw, baby. You get a whip and I'll get a saw. One good trend pays for them all, honey trader, baby mine. Trend pays for them all, honey trader, baby mine.
Well, hello everyone. Welcome to the live stream. I'm going to check the audio and all the visuals very quickly. Welcome to all of you. I'm very pleased to have you here. I'm the guy that got dragged to the party, reluctantly kicking and screaming, and then became the life of the party. So it's one of those days on the beach today when I'd much rather be on the beach, but I'm here with you instead, and I hope you appreciate it. So welcome to the stream. I'm actually pleased to be here too. I'm just going to do some final sound checks quickly and make sure that everything's okay. But if you can hear me, let me know. And if you can't, then you won't be able to let me know. But I think everything's working okay, and the mic seems to be good. Good morning. Thank you, Sean and Keith and Roland and Eli. Welcome to all of you. Magdalena, wonderful to see you here. And Friedolf, Amit, Blue Jail, all my old friends. It's great to have you all here. Oliveira, ArcisFX. Oh, well, that's me. Midlife Crisis is here. Emily Trading Joyant, Friedolf, and Christian. Everyone is here. Wonderful. Thank you very much for being here, everyone. It's great to have you. Today, I'm just going to go through a couple of things and let you know what's going on. You may have been slightly concerned that you haven't seen me for a week or more here on YouTube. For those more canny traders, you will have caught me on Olive Prime TV and wondering why I'm busy on Olive Prime TV and not here on ArcisFX. So I'll tell you shortly about that. There's no big drama or deals, just a slight shift around. But whilst we wait for everyone to come in, I think we're about to start FOMC meeting. FOMC meeting, we'll talk about that. That's coming this week. I'm not going to spend a lot of time on technical analysis and analysis today, but let's see how we go. I want to get through some of the admin stuff first, and then we can move into some of the other things. And look at some of the charts. So let's just relax. It's family time. I say it like that. There's no pressure performance or performance pressure. From anyone here, and we can just all talk as friends. So I'm not trying to impress you or entertain you. I'm just trying to be a source of information that you may or may not find useful. So Roland wants to know about the FOMC. Is it bullish or bearish? Is a bear market coming up? We'll talk about that shortly too. But let's pause for 5 minutes before I go into the charts and see. Actually, I'm going to move things around a wee bit here. And maybe we can just talk like this. This is better. Get rid of the charts for the moment. So some of you will have been asking actually here on YouTube and on X and at Olive Prime TV, where on earth I've been. Yeah, so sorry, just reading the comments. So here's the thing, right? I'm almost 60 years old and I've been trading. I'm going to be totally blunt with you. There's no pretense here with me. I'm as honest as anyone can be, I think. So I'm about 60 now, almost 60 years old. I've been trading for over 30 years. And I've been streaming for about 30 years as well, on and off, not consistently, but at least for the last 3 or 4 years, been streaming almost every day. It's pretty tiring and pretty exhausting. My passion is trading. I do like being on the camera, as you might know, but my passion's trading. So I find that too much of my energy has gone into producing videos and editing videos and all the stuff that takes so much time in producing videos like this. So I'm going to just step back a wee bit, not from my private group where we do all our trading, because that's the focus of what I do. Just going to step back a wee bit from the videos, but I'm going to bring in some more team content. We got some more people joining our team, which is really exciting. And we'll talk more about that as time goes on. But we've got a person you may know or may not know, depending on where you come from, on the crypto side. So we'll be focusing a lot on crypto over the next couple of months with the alt season and the potential crypto bull run coming up, and then a few other things going on. And we're going to do some more videos, different types of videos, collaborations, and different contributors here on YouTube. So I'm looking forward to all of that. It only means that I'll be stepping back a wee bit from ArcisFX, but there'll be very competent and amazing people helping me to run this show. And you will see me probably once a week. So don't panic. I will be around. If you'd like to get all of my trades and so on, you can join my private group. There are links below. You can find out more about that. I'll talk more about that at the end. And that's a good time to have a sip of Red Bull and segue into the next thing, which is our giveaway. So I've been asked by Emily Trading to go through this very quickly with you. I don't have a screenshot to put up, which I would like to have, but I don't. But let me read it to you. So the ArcisFX giveaway has already kicked in, and many of you will have received an email saying we're giving away a whole year's free membership at ArcisFX, worth over $1,000, well over $1,000, and we're giving that away. If you've received the email, you know what we're talking about. And there are a couple of things you've got to do. I'm going to be instructed by Emily here. Winners will be chosen live next week. And this is the last opportunity for you to just simply enter your email address into the email that you will have been sent. We'll send some follow-up emails today. Just say hi in the chat here. Say hello, ask a question, and participate in the community. We will then send an email to you next week, probably actually later on today or Monday, announcing the winner. So watch out for your email inbox if you've entered that draw. I don't think I've done this very well. I've been a little bit all over the show with announcing this because I don't feel like I've got all the details, but we will be telling you more about it in the future. And if you have received your email, just keep your eye on your email inbox. And if you followed the instruction, gone to the email page, entered your email, and you're on the list, you're in the draw, and we'll be announcing the winner by email by draw, the draw winner by email. And then in the next live stream, we'll let that be known to everyone else too. So that's a full year's membership at ArcisFX. Worth about $170 a month. So, and all the perks and benefits that come with that too. And you'll know what those are because if you receive the email. If you're not in the draw and you'd like to get into it, check out, we'll let you know at the end. I think Emily Trading will let us know. She's in the chat, and we'll let you know how to get into the draw if you're not in the draw. So stay until the end. Make sure you tune in after all the technical analysis and make sure you get into that draw. All right. I think I butchered that announcement. But anyway, let's go with it. That's okay. As long as you got the gist of it, that's all right. Right, let's go back to the charts and start talking about what's going on in the markets and what we expect to happen next week. And I'm going to align it like this. So I'm just going to answer some of the questions quickly. All right, Amit's here. Well done to you making it here, Amit. All good. Audio is good. Thank you, Sean. Friedolf, we've said all that. Ben says the sound quality is good. Deepak, Huda, good morning to you, Deepak. And Roland, FOMC. We'll talk about that shortly. Have I been out surfing today, Ben? No, I have not. There's no surf today, but the waves are a little sloppy, not too bad. But the wind direction is not quite right. So no surfing, but a beautiful day down the beach. Hello from Italy, says Stefano Vitiello. Stefano Vitiello. Mark, hello, nice to see you, Mark Tournay. And Jazz says, I'm greatly missed. Jazz says, I'm 61 years old and I hear you. A regular Sunday video would be much appreciated. And I think that's the very least I can do. Jazz, a regular Sunday video. So keep an eye out for those. We certainly will be not letting you down in that sense, of course. And it's Sunday today. This is the first of those. Emily says, subscribe on YouTube and X and get ready to drop your question into the chat. Okay, so this is how you get into the draw if you'd like to win a full year's membership at the ArcisFX private trading group. And I actually think, Emily, if you could confirm, I actually think that that also includes a couple of our trading courses, including the Swing Trading Blueprint trading course and the Natural Gas Widowmakers trading course, plus a year's membership. I think I'm correct. Emily will let us know shortly, and I'll remind you how to get in on that draw towards the end. And there's a link right up on the page here, if you can read in your chat from Emily Trading, and I'll read the link out to you. And the link is this. It's arcistrading.com. That's ARCIS trading.com/win, WIN, win. So it's arcistrading.com/win. If you go there right now, put your email address into that page, you'll be in the draw too. I think there are several hundred people already in the draw. So the competition's stiffening up. And the moment you get into the draw, the quicker you get in there, I suppose the better chance you may have of winning for whatever reason. Great giveaway, says Ben. Yeah, sure. It's a massive giveaway. We're pretty excited about it. So Mark joined the private group yesterday. Fantastic, Mark. Lovely to see you there. I did notice you popped in. I haven't been there this weekend, so not much anyway. We've talked a little bit about crypto, and crypto Paul has been active over this weekend as we enter what might be the alt season coming up. Roland from Bavaria, nice to see you too. Manny, nice to see you as well. Gigawatt, always great to see you. Emily, and Emily says that is correct. On this draw, there's a full 1 year's membership at ArcisFX private group. Priceless, but probably worth, a couple of $1,000s. And then there's the entire Swing Trading Blueprint course. That's worth over $4,000 now. And then there's the Natural Gas Widowmaker trading course also giving away. So all three of those things, a massive giveaway. And if you want to get in on that, go to arcistrading.com/win, WIN. Let's get into the charts. I'm not going to spend an awful lot of time. I want to go through the main themes here. And let's start with the currencies. Of course, we've got the FOMC meeting coming on Wednesday, and we had all sorts of jobs data last week, including the non-farm payrolls. We had the jobs, unemployment claims. We had CPI, we had PPI, we had Michigan Survey Sentiment Index, and we had a whole bunch of other stuff, some production stuff. And through all of that, even though it was a fairly messy old pattern, really, we got all sorts of bad news from the job front. I'm keeping my eye on my chat on the other screen now because I'm focused on the charts. All sorts of bad news from the job front, which may actually be good news for the market, and the prospect of further rate cuts. And then, of course, we saw the, not only the jobs numbers, but the inflation numbers were pretty good. PPI number was a bit hot, but not too bad, and so on and so forth. So a bit of a mixed bag, but the markets have pushed up steadily throughout this, and the dollar has pretty much moved sideways. And if we look at the dollar index, we've spoken a lot about this last week during the ArcisFX live streams. The dollar index actually literally over the last, since about April this year, most of this year so far, we've traded at around about 100, 99 to 100 on the dollar index. So pretty much sideways, but I think this is looking quite supportive. And it's really, I suppose, 50-50. Yesterday was a bit weak. We've seen some strong days, some weak days, but we're just holding that line and not moving, much of anywhere fast, I suppose. We've also got this megaphone pattern within a much larger megaphone. I'm going to go to the weekly chart to show you the large megaphone. It's this big green megaphone. Let me emphasize the lines here. And it's a massive reversal megaphone. We didn't get down to the bottom of it, but we bounced at the 78.6% Fibonacci level. And we're trying to hold that zone right now. Within this larger triangle, we've megaphone pattern, we've also got a smaller megaphone that we're sort of trading within right now, although that's kind of dwindled away. I think we can get rid of that. It's not really forming that pattern ultimately. So loads of doji candles along the bottom here. 1, 2, 3 spike high days, inverse hammers, which are potential reversal candle patterns. And then on Friday, we just saw a star doji. So still looking quite supportive, but we're below the 20-period moving average here on the day chart. We've got to get up through there at least for the dollar to get moving up. So far, I think the verdict is not being read or decided on the dollar. And therefore, it's difficult to tell which way some of these majors might go. But we are short on the euro already in anticipation of a dollar rally. Good day, Jacqueline and keen. So in anticipation of a dollar rally, we're short on the euro. I'm also short on the dollar yen, although that's kind of in opposite direction to the idea of a dollar rally. I think this one might behave a little differently. I really don't know. Currency trading this year has been pretty difficult. And as you can see, this has also been going up and down and all around. And since April, once again, we've been moving sideways to slightly upwards in what looks like it might be a bear flag. I have an idea that we might have to do the red line thing, but I'm already short at the lower zone. Let's zoom in, see what's going on. We got a big spike high candle here through the 20 and the 50 on the day chart, and then loads of dojis like we saw on the dollar itself against the index, the dollar index. So yeah, I think this could move down, but at the same time, it's pretty indecisive. I'm going to allow for this higher path before moving down, but I'm hoping that we'll move down now from the zone. If the dollar does move down and the yen moves up at the same time, and those, or indeed, if they stay pretty much correlated or aligned, we should see the euro yen begin to move down. We're short on this one too, despite the sort of last 2 weeks heading upwards rather than downwards. Yeah, not a great trade, I suppose. We've been in this one for a very long time. There are overnight carry costs which add up on the yen pairs because of the low interest rate that the yen attracts. So yeah, pretty tricky. But anyway, these are not large positions, and I'm willing to let these roll on for a wee bit longer. And then the other one that we have on is also actually contradictorily, I suppose, long the dollar, contradictory to the dollar yen. We're short on, whereas we're long on the dollar against the Swiss franc. So short on the dollar against the yen, but long against the Swiss franc. I think we might hold here, not only because that we've got a fairly reasonable technical pattern forming, but because when we get to these sorts of levels on the Swissy, we have to be incredibly cautious and expect that the market might rally up. On the previous two occasions when we got down into these sort of levels through the lower 200 period Bollinger Band on the weekly chart, we've had a dramatic reversal. On this occasion, we've kind of dribbled down very gently and calmly rather than these big spikes. But don't be deceived by that, because it's not inconceivable that we'll get some sort of intervention driving this up in a massive spike like we've seen before. Let's go back to the day chart and have a look at what's going on in minutia. And I believe we're holding this order block, or at least trying to. And that was kind of confirmed with this piercing pattern candle, but it's also not only a piercing pattern, it's kind of a tramway tweezer type candle. And that set us up for the next 3 days. That was the beginning of last week. So yeah, I think we could hold here on this one too. A very similar pattern to what you see on the dollar yen, the dollar index, and the dollar Swissy all look very, very similar. At some point, one of these trades will not work out. We'll have to either hedge it or stop it out, because we are short on the dollar yen, but long on the dollar Swiss, and short on the euro, and short on the euro yen. So about a mixed bag as currency plays as you might get. Just looking at the majors. Now let's go across to have a look at stocks. So I don't know what's going to happen with the dollar. I'm not prepared to make any predictions on that. I never do make predictions, or any projections even. So this is the S&P, and we took profit on Friday. All I'm going to say about this is we got the FOMC coming up. I don't know if we get a 50 basis point cut. I doubt it. I think we probably have, well, if you go according to the Fed Watch tool over at the CME, we've probably got about a 10% chance of a 50 basis point cut and a 90% chance of a 25 basis point cut. I think that the 25 is already baked in. If we get 50, that could send these markets up into a frenzied rally yet again. And if we don't get any cut, I think we'll see terrible disappointment and a potential market collapse. So, and if we get 50, we could also see a market collapse, actually, because it may spook everyone into thinking that the Fed's in a state of panic. So we don't want 50 really, and we don't want 0. We just want 25. And I think that has already been baked in to the price on the equities markets, the bond markets, currency markets, metals, crypto, all that sort of thing. So I was of the opinion that we may have got to that line on Friday. This is Friday's candle, this big red one, big small black one with a red arrow at the top trend line. This trend line goes back a very, very long way. And in fact, it's the underside of the channel that we've been trading in for a few years now. I want to get rid of these two white lines while I can see them. So it's the underside of the channel that we broke out of with Liberation Day, and we've taken all of this time to come back basically to the underside of the channel, which means we're still in a bear market, really, in a certain peculiar sort of sense. We're below the channel and have not reclaimed it, and therefore potentially this could be a rejection point. It's also a Fibonacci extension confluence. It's the 100% confluence of the last little rally, and it's the 78.6% confluence of a different rally. So it's a fib confluence. It's the top of this trend line, but we've got one vital important factor missing here, and that's the top 200 period Bollinger Band. And that's this skinny red line that you see above us. Starting to see my face everywhere, Jamie. Thanks, mate. I don't know if that's a good thing. It probably isn't, but you know, particularly in this world that we live in this day and age. Anyway, so we got to the underside of this trend line, but there's one key missing ingredient. You'll see I've got a blob drawn on my chart. Let me try and scale this in a wee bit so you can see the blob. I've got the blob drawn on the chart. By the way, the point of control on this huge S&P chart is all the way down here at 5,600. Keep that number in mind, or even below that, yeah, 5,600. Keep that number in mind for the future. Just saying. But we're back up here now and to the underside of the triangle of the trend line of the old channel, meaning that we haven't actually even reclaimed the channel yet, even though we're much, much higher than when we broke down through the bottom. I was of the idea on Friday, that was yesterday, this last close Friday, this now Sunday, that we may get a small pullback here and start to move down towards, excuse me, the 20 period moving average and maybe the 50 before a rally on Wednesday after the FOMC announcement of 25 or potentially 50 basis point cut. But we didn't pull back on Friday. We did form a star doji candle, and that has set us up actually for a pullback Monday, Tuesday, Wednesday, and then potentially a rally out of the 20 period or the 50 period moving average here on the S&P. I took profit on there. We got long down here. Excuse me. I think I've got a bug in my eye online, on stream. I think I've got a fly in my eye or a mosquito. Wow. Maybe there's a plague breaking out here. So Monday, Tuesday, Wednesday, we could drip down. I don't expect any violence, but just dribble down and then begin to pick up pace after the FOMC rates announcement. And once we've heard what Jerome Powell's got to say about all of this stuff that's going on after he's made his little speech and the press start questioning him. Now, on the NASDAQ, a similar sort of idea. You know, we didn't pull back. Friday was another bullish day, new all-time high. I've got a blob above here on the NASDAQ too. And I'm going to just refine this a wee bit. And you might look at that blob and say, well, why that blob? And once again, very similar to the S&P, but slightly different. We've got various trend lines. The NASDAQ managed to reclaim and get back inside the channel. The S&P, remember, has not done that. See, there's the green channel. NASDAQ broke down, Liberation Day, shot right back inside, no problem at all. Whereas the S&P, similar thing, breakdown, Liberation Day, there it is, shot back, no problem at all, but did not regain the channel. As you can see, we're still outside it. Whereas on the NASDAQ, we were well within the channel and firmly embedded in it and actually reaching towards the top. Now, above us, we've got another trend line with a blob on it. Actually, that blob was the perfect size. Why did I change it? We've got another trend line with a blob. Let's zoom into that to fix the blob. And above that even, we've got the channel top in the yellow blob, even higher up. And that would take us up to all the way up to 26,000 and some change. And this first blob would take us to 24,630-ish. Let's call it 24 and a half, 24.6. Let's call it 24.6. So 24.6 or 28-ish, 26,000 rather, up in the yellow blob. So quite a long way to go. And I think at the very least, we should get to the top of this internal trend line up here into this blob. So let's zoom in. That's where we are today. We closed there on Friday. We've only got a little bit further up to go on the NASDAQ. 3 days, Monday, Tuesday, Wednesday, would take us right to the center of the blob. And we'll see what happens if and when we get there. So I think that's my idea on the NASDAQ and S&P. Maybe a bit of a pullback, stocks in general, bit of a pullback until Wednesday, depending on the result and depending on what JP says. I think it should all be okay for a late rally late in this week, taking us up to some of those higher levels. I'm also long on Tesla, or have been long on Tesla. We are out of this now. If you've been following me on X, you'll have seen that I took profit on Tesla. We got long at around about 200, well, call it $300, just below $300, and we got out at just below $400. So almost $100 profit on that rally. I think, like the others, we may get a bit of a pullback on Tesla. Went a little bit further than I thought it might, actually. Slightly higher than our TP, which was more or less at the blue line, which is the golden pocket, 618 fib, previous lows. That's where we got out, took profit. And well, it just poked up a little bit further higher than where we got out. That's okay. I think we could pull back down to the top of the channel, the breakout zone, and then Monday, Tuesday, Wednesday, like we were saying earlier, and then bounce out of there. Don't like the thickness of this line. Something like that. But, and as I was saying in the live stream at Olo on Friday, allow for this to dip down even further than I've penciled in here, and allow for us to get down into these moving average confluence zones and maybe the bottom of the triangle on Tesla. That would seem extreme, but we may get some violent moves on next week with the FOMC. So something like that for Tesla. We're also long on MSTR, Coinbase, NVIDIA, we were short on, and QBTS, the AI quantum stock thingy. I wanted to get long on, but we just didn't get low enough, and we've rallied up since then. We're still at and around the point of control here on QBTS, but we have gone slightly up through it. So we may not get the chance to buy there. And then I'm going to go straight onto energies from here. We'll come back to crypto because some of you may want to leave. This is natural gas. And I posted this up on X. We've covered this many times last week, every single day. So you should be aware of where we are, knowing that we're long from 277. And that's where we are, really. And I've started adding, I don't want to complicate things because it's, we did hedge at one point and then unhedge. It left us with a net zero result, really. No gains and no losses through the hedging process. So we're long from 277. We did take some profit and we started adding some size back on as we move down. All we've done is move back down into this order block, bounced off here, quite a good rally late on Friday. So yeah, halfway through Friday's trading, we got this big bullish candle as a result of the market's moving. We got the oil report coming out a bit later on after that, and then just the general movements of the dollar and the markets overall. Quite a good rally, not all that convincing, but strong. It's good. Following a 3 candle formation down here, a dead giveaway, by the way, if you're trading. That's 3. There's a pattern called the 3 marching soldiers. I'm sure you will have known it. And if you don't know it, I'm going to give you a hint. I've got a book here called Japanese Charting, Candlestick Charting Techniques by Steve Nissen. And I suggest you get this. I suggest everyone gets a copy of that book. And in there, you'll find the 3 marching soldiers or 3 white soldiers. But this 3 candle pattern here, 3 black dots, I'm going to call it, is a dead giveaway. It's definitely a reversal type pattern. 3 morning stars angling down, slightly black, tiny little star dojis moving down. It's a dead giveaway for reversal. We did get the reversal. We then pulled back with a tweezer top. I don't like that at all. That's a perfect tweezer top, meaning that the highs are identical. I'll draw a line across there for you just to illustrate that, and then remove it straight away. There's the tweezer top. It's absolutely perfect, as you can see. Precisely the same highs on this 4-hour chart. Moved down quite sharply, but then bounced off the order block again and sort of regained a little bit of poise, I suppose. And actually what's important here is that we're actually on the 200 and the 100-day confluence as we speak. Now, the market hasn't opened up yet. It will be opening in precisely 5, no, it's 7 hours time. So we don't know where the market is right now. But I do like the way that's reacted there, trying to regain the 200 and the 100 period moving averages here on this 4-hour chart. So yeah, long 277. We're trading at 296 now. So we've still got 20 cents profit in, even though we've pulled back from that high. I think we can regain that, reclaim it, if we manage to hold this support here and move up through that level to much higher levels. I need to go to the day chart to show you where those might be. And the first target is actually this yellow line in the center of your page. And I've only made it yellow because, oh, it doesn't matter. I'm not going to change it now. I hope you can see it anyway. It's a yellow line and it's right in the middle of, there we go. I can change it. I'm going to make it red. That red line right in the center of your page there is actually the first target. That's 375. We're trading at around $3 now. So 75 cents above us. And then I think at that point, we'll be at the top of this long-term, what I think might be a bull flag, following the big move up from the 150s early, well, sort of middle of last year. That was the low that we've been in quite recently, a very strong low. And we moved up from there, forming this downward sloping flag, in line with the view that I think natural gas is actually going to be more expensive in the coming months rather than cheaper. I think we're going to move into $3 to $4 range overall, rather than the $2 to $3 range that we've been in for quite a long time. So that would push us up into these higher levels overall. And if we can get through that sort of bull flag, a little bit difficult to see actually. Let's sort of make it a little bit clearer. There it is there. So if we can get through this sort of bull flag out through the top, through the 375 level, which is crucial, I think we can get up into these levels. First of all, $4, obviously a big round number, and then probably $4.50, and maybe even as high as $5 or $5.20. Let's not get too far ahead of ourselves in terms of that. We've got to get through this first zone right now before any of that might even happen. And we're struggling a little bit, as you can see. We've come down sharply. We've formed that reversal pattern. We've surged up. We got rejected at the 20 here. This is a 4-hour, back to the 4-hour chart. Rejected at the 20 with a tweezer top. Back down to the order block. There's the dotted channel center line, providing support again, bouncing off there. So a lot of action going on natural gas late on Friday, with all of these levels being respected and various reversal candles. So yeah, long on natural gas, unless we move down below this level. I don't have to do any hedging or anything at all until we get down to 277, if I don't want to. My stop loss is at break even, so we have no risk on this trade, and I'm just hoping that we can get some profit. I'm happy to avoid any risk or any loss, but I don't want to miss out on any profit either. So I'm hoping we can bounce this channel center line and through this 100 and 200-day move, 200 period moving average confluence, and get up through that level, and then through the 20 and the 50 above us. So I'm pretty optimistic still about natural gas if we hold that level. And whilst we're talking energies, let's talk about oil, because we're still short WTI oil, and we resold the top of this rally. Actually, I haven't put the new red arrow in just yet. Let's do that. I'm going to take one from over here and put it. So we sold again on that rally up to, very, very simple, folks. I'm bearish on WTI oil. We rallied up to the 100 period moving average. That's this gray line. We're in what looks like a bear flag or rectangle. There's the move down. There's the flag. And the next move down should take us, well, the next move should take us through the bottom, equal to the distance from the top to the bottom. So that's from 65.65, and the bottom is at 61.20. That's $4.40, let's say, and that would be the target for the breakout down through the bottom here. Let me draw it in for you while we're here, so that we have got it for posterity. So $4.40 lower than this current price. Sorry, from the top of this bear flag, and that would be below $60, just below $60. So something like that, probably down to the bottom of that order block, which is actually perfect. Right down there, you can't see it's a green line on top of the red line here. So back down to the bottom of the order block, basically, is the measured move of that rally, of that move down. Bear move, bear flag, measured move down to the bottom of this order block at just below $60. And I think we'll probably, try and find some support at the round there, and then eventually make our way down to 55, then 50, and then 48. And then I think we're going all the way back up to 67 to 70 after that. So that's WTI oil. And so once again, we're long on natural gas, short on oil, which is the way I like things to be. All right, so we've got some more questions about other things. Folks, if you've got any more questions about this, then come back to me or post it up in the chat. I'll come back to it. I want to cover one more instrument. That's URA, uranium. We're short on this one. We haven't been short on uranium ever before, but we've been long a lot. So we've taken all the profits on these long trades. We've been long on uranium for over 2 years, buying the dips every time. and we had this large, massive rally, and we got out at the top. We got in literally at the bottom, out at the top. Pretty simple play. But now what to do? We're overbought. We're right at this very high level, approaching $50, and we've got this megaphone pattern that's suddenly appeared. I think we might have to pull back down to the 200 period moving average. This gap, there's two gaps below us still, got to be filled, one over there, one over there. And I think we could pull back down to the 200, that's the purple line, the bottom of the megaphone, and then launch off from there. So in lieu of that, we should be shorting from the top of this pattern, not diddling in the middle like we are right now, but I'm giving it a go, giving it a chance. It's a small position. I'm willing to add some more if we move up to the top of the megaphone and then sell it for, sell even more on the rally. But I think it's looking okay. Looking for a move down to there, down to about just below $30, I think. And then for a sharp bounce out of there back up to the top of the megaphone. So yeah, so we are short on URA and we're long on natural gas, short on WTI oil. We're also long on XLE, the energy ETF. So if you don't want to trade all the fiddly bits like oil, natural gas, uranium, etc., you just want to trade energies, but without the hassle, you can trade this one. That's XLE, the energy ETF, and we're long on that. We got long on the breakout out of this new flag here. We dip back down into the moving average conference, 20, 50, 200, all on top of each other, found support, bounced out, and we're back above the flag as we speak. That's XLE. My target's all the way about sort of up here at 98, right there. And I'm expecting the next move simply just to go up to there and then a bit of a retracement back down to this sort of level over here. All right. Okay. And we got some questions on VIX, but let's go across to the softs and grains. There's a question on coffee. I'm going to try and move through this. Let's go through all these softs and grains very, very quickly. Coffee, I'm still short. I have 3 tranches on coffee, one from there, one from there, one from there. I'm not going to go through the numbers. You can look at those on the right-hand side of your charts as you're watching or pausing, reviewing the video. We got to the 78.6% Fibonacci retracement level. We did poke up through that late on Friday and held that level pretty well. So it looks quite bullish. I don't have all of my sides on here. I've got loads to add on. We took profit on all of these shorts earlier in this year, as you can see, and we're now looking to get short again. The bigger picture here is let's quickly change to the weekly chart. The bigger picture here really is sort of this move down, an oversized bounce out of that support level. Of course, there are considerations regarding climate and mold and drought and too much water, too little water in West Africa. And of course, there are hands in the till, as always, in those parts of the world. And as a result, the coffee price has driven up yet again. We've seen these big rallies in coffee and cocoa because of West African weather, and not only weather, but potential politics as well, and other things. So we have to be cautious. But I'm still short on this. I'm going to allow for coffee to move up a little bit higher. Of course, we could have a full 100% retracement all the way up to 437 and then a move down. That might, we could get double top, or we might just turn around currently where we are at the moment. This is the 78.6% Fibonacci of the move up from the bottom. And I think, we've got some feathers poking up through the top of this fib too. Doesn't concern me at all right now. All of these spike high wicks feathering up above the 78.6% fib. And that's at $400 more or less, 402 actually. So not only is it a big round number and a Fibonacci, the last chance Fibonacci level, we've tried it multiple times before. We're trying it again. The previous occasion we tried it recently, a couple of days ago, we got rejected quite sharply. We're trying it again. This is not unusual. Look what happened last time. We, tried it, got rejected, tried it again, got rejected. Quite a sharp rejection. Tried it again. Looks a bit like what we're doing now. Moved up slightly higher than that retry, and then got sharply rejected yet again. And I think we might see a similar sort of pattern. Allow for multiple days at these levels, because obviously it likes to faff around up here, as we've seen before. So allow for that to happen. We've already had 3 or 4 days over here. Allow for another week really at this sort of level before a move down. I have to move my arrow along now, something like this. Yeah. So allow for that. In fact, you could move this arrow even further along into towards. And remember, we've got the FOMC on Wednesday, so that's going to affect the dollar, which will affect coffee too. So I think everything's sort of leaning into Wednesday next week. And, you know, what happens? What happens when we get 25 basis point cuts, a cut of 25? What happens in the presser afterwards when JP has to explain what the Fed's doing and why they're doing it? We don't know. So that will affect all the markets. Now, still on softs and grains, we're still long on sugar. There's our last tranche, the green arrow. Not going to go into these. We have nothing on cocoa at the moment. We're still long on soya. And if you were around a couple of weeks ago, in fact, in one of these live streams, we went long on the soya trade a couple of weeks ago, and we're still long. There's our entry price. We got long at 990. We're trading at 1,032 now. So a decent profit on there. We're still long on corn and cotton and wheat and lithium. Corn's looking great, moving up. I seem to have lost a green arrow. Has gone somewhere. My hand-drawn green arrow. Let's put one back in. This one's red, but it's okay. So something like this on, bear with me. So something like this on corn. We've already got sort of halfway up into the zone. I'm aiming for around about 450, 440 to 450, maybe 460, something like that. We're currently trading at 412. We got long on the last tranche at 380, so a good profit on that too. That's looking great. And wheat's looking good as well. Wheat's been really annoying, but finally, I think we've formed a double bottom sort of support here at this, the bottom of this falling wedge pattern, long-term falling wedge pattern. It's a trade that I like the look of very much, but it's taking some time and it's costing some overnights. So do we have to get further down, form another little double bottom ripple down here, little head and shoulders, and bounce out of there after clearing out the lows, you know, stopping a lot of people out and rollicking up? That could happen. But I think actually we're doing okay right now. And I think this is a sort of a double bottom that we could almost rely upon once we make a new high. So got this sort of double bottom here on wheat. So I like that one too. And we remain long on that. Corn we've talked about. And then the other one on this page, we're also long on sugar, I mentioned earlier, is lithium. And I took profit on my lithium trade, but I will be looking to get back into this as one of an excellent plays. Now, if you remember, if you've been following, we got long on the breakout out of this triangle over here on lithium. And we've now moved all the way up from that level, which is around $40. We've moved up to about 50. We took profit at around 52, and I'm waiting for this to pull back down to the trend line. This is the daily chart on lithium. Let's look at the weekly chart. You can see how beautiful this looks. There's the downward sloping trend line that we broke out of. We've got a little bit of ahead of ourselves right now, although we have got through that recent swing high. We're at another swing high currently. And okay, I'm just looking for a drawing tool. There's another swing high over here that we're just reaching up into right now at about 52. We almost got there. So I think we could get a little pull back down to the trend line and then bounce off there and move up. Allow for a dip through the trend line. And that would take us to the 38% Fibonacci retracement, this orange level here, and allow for a 50% pullback, as you should always do. Often, if anywhere, the market likes to pull back to the 50% pullback level more than anything else. And that could take us down to 42 instead of 44. So yeah, that's the lithium play that I've got in mind, just waiting for that to come along. We don't have a trade on that just yet after having taken profit. And yeah, let's go to cryptos. I've got my crypto page on here. Bit of a pullback in the last couple of hours, really. I've got Bitcoin, Ethereum, XRP, Solana. Those are my main plays, the top row here. And then I've got a few altcoins, ADA, BNB, SUI, and so it's SUI and SEI. I don't have on this page are my two sort of next level altcoins. And then this is the Bitcoin gold ratio, which I find incredibly interesting. And I want to show you this on the weekly chart just to finish with the Bitcoin part. Have we reached the altcoin seasonal run and the Bitcoin rally run? I don't know. But this is the Bitcoin gold chart. And only when we see Bitcoin break out of this pattern will I be more convinced than I am now. I'm going to remain slightly concerned about the lack of volume on the Bitcoin rally until we see this beginning to move. Now, we've got a flat top here on the Bitcoin gold ratio chart. I'm going to put a line, rough line. It's more of a zone, really, but let's just put a line there so that we know what we're looking at. I'm going to make it purple, the royal purple. And if we can get up through, obviously that high is important, but through this level generally and hold above it, I'll be pretty pleased. And that will take us into a breakout out of an ascending triangle pattern, and that would be incredibly bullish. That would mean that gold, rather Bitcoin, is doing better than gold. And for those who think that, okay, I'm looking for a line. For those who think that Bitcoin is the new gold, you might be using this sort of chart. If I can find a trend line, you might be using this sort of chart as your justification for saying, yeah, Bitcoin's going to do better than gold, and all we got to do is break out of this triangle for Bitcoin to keep going. Look where Bitcoin gold ratio began, all the way down in the 7s and 10s and 15s, and now it costs 31 ounces of gold to buy 1 Bitcoin. Whereas you could buy 1 Bitcoin with 5 ounces of gold. Obviously, you know, in the early days, it's completely different. But in these more sensible times, we are apparently reaching a point where Bitcoin is beginning to become slightly favored over gold. Interesting. And now, folks, I think that's it. We've talked about currencies. We haven't talked about metals. Let's talk about gold and silver. I'm short on gold, but I'm long on silver. This is the 8th time we have done this play, and at some point it's going to horribly fail, but so far it's okay. I'm now short on gold, having taken profit at the top. We got short at the top at the same time. This is a 4-hour chart. Let's have a look at the daily chart. And the daily chart's dominated by this very large ascending triangle pattern that we've now moved out of. I've got to make these lines a different color, and I do apologize for the faffing about. But it's because when I go to Olive Prime, I've got to change chart colors. And I'm going to change these to 2 too. Give me 1 second. So it's a pretty simple picture for me on gold. We've got a large ascending triangle that we broke out of. We had to redraw this triangle multiple times as time passed because it took so long. We started off with 1 there, and we had to extend it, and again, and again. And so we now have a legit triangle that we've now broken through the top of after redrawing it so many times. We also held the support here at the 20 period and the 50 period moving average confluence. We bounced out through the top of the triangle, through the top of that previous all-time high. We've made a new all-time high on gold, and we're reaching up into the first target. That's this sort of skinny line just above us. Let's make this one black. So we reached the first target. We've also reached that's the second target. The first target was this red line. Second target, this next black line. And the third target is even further above us at this line over here. And that's also white. So that's the third target up above there where this next arrow is pointing. So what this means is that we may be premature, having only reached the first target and not the second and not the third, and that we may have to carry on moving up. It also means that if we do pull back down from here, we may have a good chance of pulling back down towards the triangle again, and maybe even into the triangle, like I pointed out earlier on a different instrument that you have to be careful of. So pull back into the triangle or towards the triangle would look something like this. I know there are a lot of lines on this chart. They're just arrows. Don't be afraid of arrows, okay? They're just arrows. This arrow that I'm busy with right now is the potential pullback that I'm currently trading, and I'm allowing for us to get back down to the 50-day moving average or the 20-day moving average. That's the green one here, and the 50 is the red one down here. I'm allowing for a pullback to either one of those to then get long again for a bounce out of there into the third target that I've got drawn on here, and that's at 37,800. Sorry, 37,80. It's actually 85, but I prefer the 80s and the 20s. So that'll be my next target. We will get there at some point, I do believe. But whether it's immediately now or later, I don't know. But if it's not now, I think we could pull back down towards the triangle. And that's the play that I favor, obviously, because I'm trading that play. If I didn't think that was the right play, I wouldn't be trading it. So, but having said all of that too, we've got what looks like a potential bull flag here. Doesn't look very weak. And since we got short 4 days ago, nothing's really happened. And if I go to the 4-hour chart, you'll see that actually Although we're slightly in profit, there's no panic from that perspective. We've got a couple of dollars in profit on this, but certainly not moving down. Although the last couple of 4-hour candles, certainly not looking strong, but it's not looking weak. We are holding the 20-period moving average here on the day chart, on the 4-hour chart rather. That's this green line, and we're also holding it on the day chart. So right now it's way below us, and that's the line that we're hoping to get back down to, the 20-period moving average on the day chart. So that's all of that, folks. Metals, and at the same time we're also long on silver, and it's really just a breakout of this very short-term rising channel. And I just played the breakout, aiming for the next blob above us. And if anything on metals, I'd rather be hedged, i.e. like we are right now, short on gold, long on silver, or I'd rather be long on both. But I'm not convinced that gold's moving up right now. So instead of being long on both, I'm long on silver, but short on gold as a hedge. And we'll see how these work out. Remember, because we've got the FOMC coming on Wednesday, that's going to affect everything, not only currencies and stocks, but also gold, energies, crypto, and so on. And so all of this is going to be affected by those moves. So that's gold and silver. I'm short on gold, long on silver, and we took profit on copper yesterday, on Friday rather, after a month and a week of boringness, holding the 20-period moving average, but not claiming the 200 here on copper. So I've got out of this trade. We took a few dollars profit on this long trade, and if we, I don't know what's going to happen next. We'll try and buy the dips, maybe a fresh low down into that double bottom on the right, on the left-hand side. If we get that, if we can't get that, then a breakout through these moving averages and a dip back down into them to get long on copper again. So although we got long at the bottom, we got out at the top, we sold reverse, stop and reverse at the top here, and got out at the bottom, stopped and reversed again at the bottom. So we had a fantastic profit on copper. But the last trade, the very last one, which is a month and a week ago, has not gone anywhere. Slightly up, but not much. So I just closed that trade, took some profit, and reallocated that money, finances, to crypto instead of copper. Having done that, copper will probably rally by $10 or something tonight, and when the market opens. And that's it, folks. I think we've covered basically everything, unless there's something that I haven't covered. The ZAR moving down for inexplicable reasons. Someone asked about the VIX. Let's talk about the VIX. We may as well talk about TLT while we're here too, and the 10-year note. This is the VIX. Not much to say really, apart from the fact that I only buy the VIX about twice a year. You can see the last 2 times I bought the VIX last year, and I'll be looking to buy the VIX again closer to the bottom of this green channel or block or zone, and we haven't got there. We haven't even got into it just yet. So only when we break into the green zone will I start looking at VIX longs, and then they only last a few days, maybe a week. We try and get out on these extreme spikes, and then wait for the next opportunity for us to get long and to dip back into the green zone. And that's the VIX. And I'm going to go back into the chat quickly, go through some of these questions and everything. Lots of questions, folks. I don't know if we can even get to all of this. Why are some people bearish on natural gas, Stefano says. Well, you should be bearish on natural gas in general, Stefano. It's a range product. It's not a trending market. And so we're looking to sell highs and buy lows. And the lows, I think, are closer to $3 now, and the highs closer to $4. Last year, the lows were closer to $2, and the highs closer to $3. I think we moved up $1 or so. But we should be looking to sell when we're at the highs. We should be looking to sell. When we're at the lows, we should be looking to buy. It's a range market. It's not a trending market. Japanese candlestick charting techniques by Steve Nissen. Thank you, Ben. That's correct. I don't know how to show. Oh, I can show these up on the screen, There we go. No, does that work? Yeah, there we go. Fantastic. Oh, great. I now know why I'm using StreamYard and not Streamlabs again. Yeah, so that's the book that I flashed up earlier. It's this book here. Japanese. Let me get the screen bigger so that you can see a better picture of it. And actually, you can buy this book. Let me put it in front there. You can buy this book secondhand on those. As you can see, mine is secondhand. I bought about 4 of them so far. You can buy these books at online secondhand bookstores, and they're around about $100 to $200 depending on the condition. That one's not in great condition, but I didn't have to pay a lot for it. Pages are good though. Or you can buy it new on any bookstore, Amazon, whatever, but it's expensive. I think closer to $300. So good day, Jacqueline. Nice to see you. And Tamaz and Will. It's lovely to see all of you. I've missed some of you folks. And although there may not be many here on a Sunday night, it's great to see everyone here anyway. Roland, lovely to see you too. Yeah, so here we go, folks. Win 1 year in the ArcisFX private group and the Swing Trading Blueprint and the Widowmaker course, all scot-free. And all you got to do is go to arkistrading.com/win and enter your email address so we can contact you when you win. And then we'll get back to you early next week. And the winner will be announced in next week's live stream on Sunday night. So we'll be, popping the poppers and celebrating with that winner on Sunday. But we will let you know by email during the week. So make sure that you follow these instructions on the screen. Say hi to us here in the chat and make sure you go across to arkistrading.com/win and enter your email address so that we can contact the winners. All right. We're back in action. Yes, we are, Martin. Absolutely. What are your thoughts on TLT? Yeah, let's go to TLT. I forgot to talk about that. We were there and then we weren't. So let's have a wee look and try and get that up. TLT. Here we go. Yeah, so TLT, look, I mean, we've been long on TLT for ages and ages and ages. I've been buying the dips. Eventually got out at break even after a very long period of going nowhere slowly. And that's where we are, moving down to the apex of this falling wedge. We've now broken out through both of these trend lines. There's an internal skinny red trend line, and there's this higher one that we've broken out both, and the 200-day moving average. So it looks pretty bullish and pretty good. We've got loads of gaps between us and the sort of moving average cluster down here. Two gaps really. So I think we may have to do some work back down into these levels. I don't trust this rally just yet. We haven't had the pullback, and the pullback will take us down to the 200, which is a good area for us to test this idea that we may have changed direction. If we manage to do something like that, fantastic. But if we don't, and we just sort of dribble down after having tested that trend line and end up just sort of dribbling down again into those lower levels, it won't be very interesting. So that's what I'll be watching. We've now taken profit on our longs, a very small amount of profit, almost nothing. But I will be looking to buy again if we get, the formation of a structure, a tradable structure, where we get a breakout, a pullback, and a bounce, which should confirm the direction that we're looking at. So yeah, I think pretty good. So far, so good anyway. Good move for Tesla. Any pullback? We talked about Tesla. Thanks, Ben, for the question. 25 based in prices, yeah, probably gigawatt. Sell the news, maybe. Dark twist. What was that, Jigger? I don't know what you're talking about. The blob. If you blob it, they will come. You're quite right, Mark. You're absolutely correct. Blobbing it makes things happen. I'm just going to pick these questions out at random as we close off here, folks. When do you think natural gas will start heading up for the winter? No idea, mate. I have no idea. Cal, did you get a green trend line on natural gas going up? How did I get it going up? I don't know. I'm not sure, mate. That's a great book. It is a good book. The book name is, make sure everyone in this chat should buy this book, 100%. There's the name of the book on the screen. And that's it, folks. There are loads of questions, comments on sugar. Yeah, Mohammed, let's just talk about sugar quickly. I'll finish off with this. Let's quickly shoot across the sugar screen. Yeah, sugar hasn't been great, but I think like most of these commodities seem to be trying to find their feet. And what I think we got here on sugar, once again, we've got a beautiful technical setup. It's just got to do the right thing now. It's got to be obedient. We've got all sorts of trend lines, channel lines, all quite neat and orderly, really. And what we've got here is potentially a double bottom after that move down, a retest, strong move down, indicating one single candle to get all the way back down here after taking all of this time to get up there and consolidate. It just took one candle to erase about 2 months of work, 3 months. So, but we bounce off out of there quite nicely. It does look like we're trying to form a double bottom. We're seeing a similar theme across all the commodities, these softs and grains. Sugar's moving up. Cocoa's trying to hold ground. Coffee, even though you don't want this to move up, is moving up. Soya is moving up. Cotton and corn. And I think wheat and all the rest of them are all aligned roughly in a bit of a commodity rally or bid or cycle right now. So I think it looks okay. There's a dark twist about your face being everywhere, and you don't know if this is a good thing these days. Gigawatt, you're quite right. Yeah, I said that with seriousness, like dead seriousness. Good stuff. Thanks, James and chat. Well, folks, it's been wonderful to be here. I see people are draining out of the room faster than I can speak, so it means it's time to finish. Everyone's got bored and tired of all this nonsense on a Sunday night. Have a great Sunday evening. For those in my private group, I'll see you a bit later on when the markets open up. We're going to be talking some more crypto later on Sunday night in a few hours' time, and we're looking at the natural gas market open up as well. If you'd like to be there, you can be there or be square. There's a link below to join my private group. It's not expensive, and you'll get to be part of, I think, the best trading community on the internet. And I really do believe that. And I think my members think that too. So have a wonderful evening, and I'll see you soon. And make sure on your way out, please, I'm begging you, please like and subscribe, hit the notification bell, click all the buttons and things that you have to do the right thing. And I'll see you in the next video next Sunday. And please keep an eye on the channel during next week, because there will be other videos coming up apart from Sunday night's video from me. So all sorts of wonderful things. Yeah. Great session, as all of you are saying. Awesome as ever. Thank you, Ben. It's great to see you. Stefano, email does not need to be the same. There you go, Stefano. I don't know what Stefano had written, but there's your answer. It doesn't matter, Stefano. Don't panic. And remember, folks, there is a draw going on as we speak. And if you win by doing the right thing, which I'm going to try and find, simply going to arcistrading.com/win, W-I-N, arcistrading.com/win, you could be in line to win a year's private group membership worth thousands of dollars, my entire swing trading blueprint training course worth thousands of dollars, and my natural gas widow makers course also worth quite a lot of money. Not quite thousands, but worth much more to you than a few $1,000s. All right, folks, see you soon. Take care. Enjoy the stream. Speak soon.